Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Wednesday. We're at the 20th of August 2025. Well, as you can see behind me, there's an awful lot of red. You did come back in the Dow to close higher. Most of the other indices were down. They weren't on the lows of the day. They came back a little bit. You came back nicely in NVIDIA. It had sold off several dollars and only closed down 24 cents. Amazon was down about $4. Netflix came back beautifully, only down 29 cents. So the big boys that were leading the parade down did come back. Apple stayed down about $4. Home Depot came down about $5. It's interesting because Lowe's was up and Home Depot, they got hit on all this. The metal markets, there was a bid move into what? Into safety. So the markets ran there. They dropped Tesla. Just most of the markets that have been going up, especially the big tech, got hurt. Now, we're going to get a lot more data tomorrow. And in that data, what you're going to get, unless you turn here, we're going to get Atlanta Fed President Bostic delivering a message. We want to see if he has anything to say about the FOMC minutes that came out, and I'll get to that in a minute. Jobless claims come out at 7:30. The Philly Fed regional business activity at 7:30. S&P Global Group at 8:45. The Conference Board, July leading coincident, lagging indicators at 9. Home sales existing at 9 o'clock. Natural gas storage at 9:30, and then we kick off, and it'll be a day of interviews because the Jackson Hole Economic Policy Symposium kicks off, and on Friday we get the keynote speech from Fed Chair Powell. So this is all the important stuff. Now, when you looked at the FOMC minutes, at least my take on it was this. We had 2 dissents, and that was it. I was looking to see if other members were leaning heavily into a cut. They were not. That's my take on it. I also saw a shift away from what we had been believing. The market has been thinking that the Fed was worried about labor more than anything. If you read, especially my report tonight, you're going to see that they feel that the jobs market is still in pretty good shape. Yes, they see some fraying around the edges, let's call it, but not enough to worry. They're more concerned, at least my take on what I read, are the tariff inflation that is starting to creep up. And they are concerned that they don't have a grip on just how this might play out. I'm going to stay with what Mr. Khashoggi had said, that it's going to take months up to a year as we see this work through, and that's what I'm expecting to happen. So does this give a rate cut? I don't think it did. If you were looking for this to be the move, no. And if you think that the Fed chair is going to come out super dovish, I think you got another thing coming. That's not what I'm thinking. Does that mean the market has to fall apart? Absolutely not. We know the next Fed move, in theory, should be one of breaking, not rallying, if it's going to come down. Here's the argument there. If it's going to come down. Some of the Fed members think we're just about at a neutral rate, and you may not have to go to an easing rate to support inflation that is coming up. Got to read what the Fed said. This was interesting and threw a wrench in what a lot of people think in the market. Now, as you and I take a look at Siri's breaking down. That's what I thought could happen here. Coming back, you're getting a pattern very clearly of lower highs, lower lows, right back to the 18-day average. So just yesterday, we were talking, could this market return to the support here? And it has. Is it trending? It is not yet. While the swing line is down, it's a break in a market that's overall bullish because the support levels you haven't closed underneath them. When we look at Bollinger Bands, they're not in play. You hadn't hit the upper one on this rally, and you certainly haven't hit it again on the break. When we take a look at momentum, you had been overbought, and overbought leads to a correction. You're getting the correction. I'm expecting churn in the market more than anything else. When we look at Netflix, I think you'd agree. It keeps holding here the 18-day average. It doesn't have to. If big stop orders were hit for any reason, and you get through that 1192 zone, you could approach 1160 to 1137, but you were just there. You've had that correction. You had the rally. You've come down. As long as you don't take out these lows, I think the chart action is actually fairly friendly overall. When we look at Dash, it went from the upper Bollinger Band now and took that journey back to the lower band. And no, I don't think there's a lot of downside in the market. I think that the market's oversold. Bollinger Bands, they're difficult to stay under. You only stay under them 5% of the time. That's not a buy signal, but it is certainly a signal for the shorts. Short covering. When we look at United Healthcare, which some of you have asked me to cover, I certainly would not tell you to buy an upper Bollinger Band. I'd rather be left in the dust if that's going to be it. This type of play, that's Warren Buffett. When news came out that he had bought the market and the shares, that's the Johnny-come-latelys. Oh, if Warren wants it, I want it. Pullbacks at 268, 267, that'll get my attention, but not an overbought market in an upper Bollinger Band. Then we come to Exelon, and we were just down here. Why did we rally today? Let me give you what I think. Do not believe that Ukraine and Russia are going to get close to a deal. That's my own opinion. Russia today threw the wrench. Lazarev came out and said, well, anything that you people are trying to do for defense for Ukraine has to involve Russia, and we have the right to veto anything you come up with, and you have to agree to it. Do you honestly think you're going to get Ukraine to give up land? They can't have defense from other countries in there. Russia has total control on a veto. If you believe that, you should go buy some of the bridges in America that are for sale from people you'll find, and you can put up your toll sign. Okay. Robinhood, maybe that was enough. The market's down because the cryptos have gotten hurt recently. Markets come down with the NASDAQ. Okay, but I don't know that it's going to fall out of bed much more than that. I think we're in a zone where I'm going to start looking at the market from a more interesting point of view. Tesla. Now, I just read about their new car in China. It sounds pretty interesting. They've got their long edition now. It's a true 3-row seat car. A lot of enhancements came out with it, new looks to how things work. What if I tell you, you know the yoke stick that we all love in cars? We're all used to them. Now you can get one put back in China. They don't come with it. You can have it put back for $385 American because people don't like that this is too far out. Sometimes you try to be ahead of the curve so much you make people uncomfortable. Turn signals on a steering wheel, I don't think I'd like them. Joby. Still washing out on this decline. I love that it's doing that. All I'm hearing are the good things about Joby, not bad things behind the scenes. In other words, everything I'm reading, how their manufacturing is coming along, when they'll have planes in America ready to go. There's a whole certification, how they're doing in Dubai and the other areas where the rich don't want to take the ride through the desert to the airport. They'll take one of these. I like what I'm hearing there. Let the chart action tell you when to come in, which it isn't doing. XLF, the financial sector, higher lows, higher highs. Now, when interest rates actually break, this is a market I want to be involved in for my subscribers. However, when are they going to break and when are they going to hold? Everything I'm reading, I'm questioning right now. And given that we'll be able to see over the next 48 hours a lot more reports and Jackson Hole, what the Fed chair says, which I think he's going to dodge committing himself. We'll see if you can hold up. Any move under 52.29 that closes under 52.31, the 18-day average right now, is bearish. You must hold that number. You're overbought. I don't see new money trying to fly into that. In XLI, we keep talking that this market keeps trying to come up and get over that 18-day average, hasn't been able to do so. It, too, needs low interest rates. It's been mostly sideways, and now the volatility is even shrinking more with the Bollinger Bands narrowing in. In the energy select sector, this happens to be where we take a look at, the refineries and so on. If Russia and Ukraine do not, I want to repeat, do not reach a peace treaty, truce, whatever you want to call it. And the U.S. under Trump then comes out with the sanctions on Russia because they made things impossible. What will happen is probably you'll take that Russian oil off the market. Others will step in to get there, but oil prices might creep a little bit on all this. The market's fighting a battle trying to figure that out right here. In the gold market, the stock market break today, I don't consider that a big break. There was a rush into safety, but I don't see that as an overall buy here yet. And I'm the guy that's bullish gold long term. I still don't see it on the charts. In the silver, the market was able to hold the 18-day average. They tried to beat it down. They tried to beat the gold-silver ratio up, and it came back still favoring silver by the end of the day. In the copper miners, we're seeing profit taking. You've lost you lost the ability to embed, and you're still overbought. I'll let other people want to own overbought markets. BND keeps fighting at the 18-day average. I think the trade is as confused as I'm presenting the picture to you about what to do there, and TLT, and in the dollar. All you did today is rally back to that 100-day average in the 18, the green and the red, and you stopped and you did a flip-flop in the euro, trying to break down to that number. These are interesting markets, but not really great trading markets. Understand that. There's not something to do every day new in the market. Sometimes investors sit and invest. Sometimes traders step back and they don't trade. That's where I think you're at right now. It's interesting to see how my subscriber video has taken the positions down and done well, I must say. And now the question is what to do. Keep in the back of your mind, at market tops or reactionary tops, when you come up and then you're going to get a reaction, it is common for a position to go against you. And yes, you come out, sometimes you take a loss. There's nothing wrong with that. That's the difference of trading and investing. If you're against taking losses, you're an investor, not a trader. Don't kid yourself. You know, your portfolio is going to be built up over time and painful when bear markets come because you'll say these companies are great. I've been there. You've been there. We know how that works. Just remember one other thing. All this news, remember you can get more of it by clicking up here at any point. Click these icons. They'll take you to our free offers, and you'll get everything you need there. I'm Ira Epstein. You have yourselves a great day, and I will catch up with you all in the other videos tonight or first thing in the morning flash video. Take care.